Hi, and welcome to the Money Tips No One Told You podcast, presented by First Pioneers Federal Credit Union. Here at First Pioneers, we're passionate about helping not only our members, but our community become financially successful. That success often starts with basic knowledge, things like knowing how different account types work, to understanding terminology, or even tips that make your life easier. The more you know, the more success you will have as you handle your money and your finances. Let's get started. Okay, welcome everyone. Hi, I'm Heather. I'm with First Pioneers Federal Credit Union, and we are back today with a very special episode because I have a very special guest here to talk about credit unions. His name is Matt. Hi, Matt.
Hey, how are you, Heather? Good to be here. Excited to jump on with you. I know we've chatted a little bit before, but Matt Rookard, I am the president and CEO of the Louisiana Credit Union League, and we represent all of the credit unions in the state of Louisiana. So really happy to be here with you to talk credit unions.
Thank you. We are excited. I think there's a lot of people that there are things about credit unions that they just don't really understand if they're not a member, especially because they're so used to a bank and, having their accounts there, that I think sometimes people don't even understand that they can actually join a credit union and what those benefits are. So would you mind explaining a little bit the structure of kind of credit unions? And you said you were with the Louisiana Credit Union League, and I'm not sure people understand how much support there is behind a credit union. So could you explain that structure a little bit?
Yeah, and first I'll back up just a little bit. You said a lot of people that don't understand credit unions. I started here in May, and I'll be honest, I still had the kind of 1980s version of what a credit union is, with being tied to a specific workplace and not kind of having much deviation from that. And so that was kind of my perception as I started researching where the industry was, and I can tell you firsthand I was wrong, and so wrong in a good way, but yeah. So the credit union structure, you're right, it does have a lot of support. I mean, the biggest difference between credit unions or banks, first and foremost is kind of the way they're structured internally. With banks have shareholders. A lot of the bigger banks that you probably know the names of, stock market type ownership. They're owned by individuals, and you can buy a share. A lot of the regional and community banks, those are owned by individuals who a lot of times started the bank many years ago. But a lot of times these are family based, especially in Louisiana. And credit unions are a little different, more of a cooperative structure where the members of the credit union actually are owners and have a financial stake in the success of the credit union. And so, they did begin in the early days coming, from mostly employer-based fields of membership, where you had to work in a certain place to be a member of the credit union. That's really changed radically over the last 10 to 15 years with the changes of field membership. We're now largely communities and even regions. If you work, play, or attend church in an area, you are eligible for a lot of credit unions. So if you've never looked into it, you're probably eligible for way more than you think. I think that's the first takeaway. But then I work for the Louisiana Credit Union League, and so we're kind of the state trade association, is how I explain it to a lot of people. But we're at the state level, but that even pushes down. I mean, we have regional chapters that operate, that help credit unions network with each other, make sure that they're understanding kind of what other folks are doing, what the economic situation in the region is, things that work in those communities, so that they can kind of share information, which you don't see a lot of that in the banking world either. But then we roll up, we operate the state league. We do a lot of advocacy work at the Capitol, and then obviously up in DC. But then even further, the leagues have a group where all of the leagues, so all the state league presidents like myself, we're all working together to make sure we're doing information sharing. And all of that work is supported by the Credit Union National Association, so the national group. And then I think the other thing, just while we're talking structure, is, a lot of people, look, myself included, you see FDIC insured, right, on every bank you go to. And if you have some money and those limits becoming problematic, or you're worried about, what happens, we're kind of in a dicey financial times right now, trying to see where things are going to work out. But, we don't, credit unions aren't insured by the FDIC, but they are insured by NCUA, which is the National Credit Union Administration. So that is basically the federal regulator for credit unions, and then when they regulate and insure the deposits of the members. And so, very, very similar program to what most folks are familiar with FDIC insurance. So just kind of wanting to throw that out there. That's a question I get a lot from the general public is, well, y'all aren't FDIC insured? And it's like, no, but we're NCUA insured, and it's basically the same thing. So,
yeah, I think I've gotten that a lot too from people that they don't understand just how similar we are. I think they sort of look at a credit union as, I don't know, smaller, and maybe we just don't do as much as a bank would do. But I mean, that's so not true. Maybe it was years ago, maybe it was different then, but I know now, I mean, we offer the same services and programs that most of the banks that they could join offer. Do you find that's true?
yeah, I mean, there's obviously, I think there's some differences too there with, like, if you're talking about the big national banks, right, like the Chase and Bank of America, like, they're always going to be probably a little bit different. I mean, the trade-off I think that goes in our favor is actually that local input. We have grown out from, employer based to largely regional. And I think that's good. That allows us to get some scale, the credit unions to get some scale and operate a lot more efficiently than we have in the past, but also still keep that decision making very, very localized, right? And so, the difference between walking into, a Chase Bank, for example, and then walking into your local credit union is just night and day. I mean, the level of service that you're going to get, that personal service, and then, we talked a little bit about ownership, but I'll be honest, the ownership is not what makes it interesting to me. It's actually removing the financial motive, right? And so several years ago, Wells Fargo got caught up in a lot of kind of scheming to hit numbers, and it's very much that corporate profit. You have to hit your quarterly numbers, no matter what. And credit unions don't really have that. I mean, you're owned by the members that you're helping, right? And so it takes that profit motive, that quarterly earnings motive out of the equation, and allows those frontline service reps, and I mean, all the way up to the senior teams, to really kind of focus on what's good for the member. That's honestly, my background's in economic development. I care a lot about the financial situations of families in this state. I've kind of made that my career. And that's why I got into the credit union space, is because getting away from the conversations about, how do I make money on a product, and getting into a conversation about what is the right product for this family, that to me is just kind of night and day. And so I find there's some really, really special people that get involved in the credit union movement. And they really kind of have their motives aligned with the mission of the institutions, which is to kind of advance people's financial situation.
Right. Making them more financially healthy, I think, is the word we use at First Pioneers a lot. We want you to be financially successful. Credit union motto, people helping people.
Well, if I can real quick, I'll jump in, because I think, my background is in economic development. We always focused on the middle class, right? Like, Louisiana has rich people. Frankly, the rich people don't need that much help. I mean, they'll figure it out. They can pay advisors. But we have an abnormally large population of low income folks. And that is really, really hard on an economy. And so, if we as a credit union industry can get folks in the door, because we're actually trying to help, right? There's that kind of different interaction. If we can get them in the door and grow them from, being lower income into a middle class through money management, through, proper savings programs and those sorts of things, and kind of help guide them along the way, keep them out of these predatory interest rates. What that really does, not only for the credit union, I mean, frankly, because you're member limited, that's one way for the credit union to grow, is to kind of increase the financial wherewithal of their membership. But it's also really good for our economies, because people who have more can spend a little bit more. It reduces the burden on the social programs and allows them to be more effective. And so, giving somebody who's upper middle class another few bucks doesn't really move the needle in the way money is spent in an economy, but giving someone who's lower income, access to that dollar really does make a much bigger impact. And so I think that's kind of, to me, where all of this really aligned in terms of the mission. So.
And I love that. That's one of the reasons why I love doing this, doing the podcast, doing the financial education classes that we do at the credit union. Just like you said, just trying to help people get to a better place, because the impact, there's such a ripple effect in that impact that I don't think people really comprehend how far that impact goes when you can help just even a handful of people get to a better place.
Yeah, I mean, it's in effect, it's doubling, right? Because you're taking somebody off, let's say best case scenario, off of a social program, and you're so a net negative, and that's not as a person, right? Just as a financial number. You take a net negative and you make it net positive. They're now contributing through taxes and even rent. You're indirectly paying a property tax in that rent. And so making them contributors long term is really good for the economy. And oh, by the way, the byproduct is, it's the right thing to do. And so, that's kind of the fun part of all of it is like economically you can point to the numbers and you can kind of have that conversation, but the real motivation is like helping families, right? Like we've largely as a state not done really good at taking care of our brothers and sisters who live around the state in some of the poor areas. And we've seen years of disinvestment in various industries. New Orleans and Lafayette was oil and gas, and most of that, we not only did we let go to Texas, one could argue we kind of pushed them to Texas. And so, we haven't done a good job at coming up behind them or those industries and giving people opportunity and supporting the education systems that, healthy communities need to have, supporting the healthcare opportunities that folks need to have to be able, you don't think about healthcare a lot of times in terms of an economic driver. But if you look at the data, it's one of the highest correlating factors. Healthy communities tend to operate better. And so we've just done a poor job at all of these things. And so the way I've chosen to kind of go at it is, one family at a time, right? Like if you can get in with one family, help them understand how you can kind of put your money in, use the right programs, save money over time, and get yourself into a better position. And then we also know that flows generationally, right? And so if we can do that one family at a time, you're kind of having this exponential impact, over the years. And I think that's the way we have to do it in Louisiana.
I agree with everything you just said.
Good.
Awesome. So when you said it, and I hear it all the time, we hear the credit union movement. Do you think basically what we just discussed is the core of the credit union movement?
I mean, it is to me. I think it's different for everybody. I mean, I had, again, I'm still pretty new to this, but the whole idea of people helping people, I mean, I think that sums it up. And look, if you want to work helping people, credit unions are a good way to get into that space, right? But you're also not going to make as much as you make at a bank, likely. I mean, it's comparable, but it's probably not as much. And that's because we're not trying to have everybody make as much money. We're trying to help the members, right? And if we keep that focus on the members year after year, you kind of end up in a better situation. And so, to me, that's what the credit union movement is about. I mean, in terms of a pure definition, there are probably people who've done this for 20 years who could tell you a lot more about it. But at the same time, I do think the movement can be summed up that way, but I also think there's individual kind of trigger points for everybody that keeps, just like you were saying, that's what keeps me going. That if you don't have that as part of the definition for you as an individual, I don't think it matters what the big credit union movement means, right? But yeah, at the end of the day, it's about people helping people, and if you can do that financially and do it well, there's not a lot of opportunities for that kind of service anymore. I mean, everybody's trying to sell you something, right? Like even when you're scrolling on TikTok or Instagram nowadays, right? Like those people that you're hearing advice from, they're not doing it to help you, right? They're doing it because that's how they make money. They make money from you watching that video. And so it doesn't even matter how true some of that stuff is. It doesn't matter if it's the right thing for you. It doesn't matter if they go into all the laws that govern this tax strategy or this business investment, because they don't care, right? They're trying to get clicks and likes and shares and retweets. But if you walk into a credit union, and you talk to somebody and say, hey, here's the issue I'm having, they're going to listen. They're going to help guide you through. They're going to get you into a program that actually works for you. And they have the motivation to do it because if they can help you, they have a member for life. And so it's kind of the alignment of the incentives that I think make it all work.
That's so true. And that's one of the things I love, the things I've seen, not just in my credit union, but you go to conferences and we all come together and share ideas and do all of those things so that we can grow and do this better. And the stories that I've heard of people being helped, and because the credit union is such a big family, hurricanes hit and people can't get to their money and they can't repair their homes. And, next thing you know, the whole credit union is out, helping somebody clean up their yards or finding ways for them to get their cash, or, they've walked in the door thanking you for the help you gave them, getting them this loan, that loan helped get them where they needed to be and help repair their financial situation or something. And it's a very rewarding thing. And I know as the marketing person, you talked about likes and all those things. And I know for me, I'll look at those numbers too. But when I see a lot of that happening, then to me, that means somebody saw the message. Somebody saw what I was trying to tell them. And I get excited about that, that I hope they learn
you're doing
something.
it for the right reasons. I'm saying there's a lot of those financial gurus or tax strategists where it's like, they're talking about tax harvesting. It's like, you're an audience full of, lower income people. They can't be their own bank, no matter how bad they want to or how much they understand, what rich people are doing with their money.
Right.
But yeah, I mean, I love this world. I firmly believe that, financial empowerment is probably the best trigger we have. And, I ended up through college. I mean, my own personal experience, I grew up, not poor, but lower income. Mother was a teacher. My dad worked in the mill in the Delta in Northeast Louisiana, which is, one of the poorer places in the poorest state. And so, we just didn't have a lot. And I went to college. I was 17, 17-year-olds make bad decisions. I lost my top scholarship in 3 months on the quarter system and had to start paying. And of course, as luck have it, I'm not in college. I fall off my parents' insurance, pre-Obamacare, and playing soccer, break my leg, right? And what do you do? What do you do? What most people do, you go to a payday lender, right? And so, I've got this kind of personal experience where, all the way through college, I ended up paying my way through college. I had a few student loans, but not terribly much, luckily. But I paid on that loan, one payday loan. I did not refinance it. One payday loan that bridged me to being able to work again with that broken leg. And it took me, I think I was 7 years into paying, if I'd have to go back and check my math, and still owed, like $2,000 on a $3,000 loan, somewhere in that range. And, it was just devastating. And I didn't have the credit to be able to go refinance, right? Like if I knew what I know now, I would have walked into a credit union and just said, somebody please help me. Like things are going well with the exception of this thing. But, I was lucky where, able to get a college degree and get through that financially and then get to a good paying job on the other side that kind of kept me from the spiral that happens. And so I was very fortunate, I would be very much in the same situation as a lot of folks, which is just that, you're making just enough money to pay for rent, for food, and pay that payday loan. And if the numbers don't work out exactly, then you got to refinance the payday loan and start back all over, whether you're 2 years or 10 years into it. And so it's a bad situation, but I'd very much urge people, you don't have to be on either extreme. You don't have to be rich. You don't have to be poor. Go talk to somebody at credit union about what you're trying to do and see if that advice changes, right? The advice you're hearing from people trying to make money versus someone who just wants to kind of help serve you and better your situation. I think people, if they just would have the conversation, would see that difference in motivation and how it can help.
That is so true. And I think some people are caught in, with so much coming at us these days, with so much instant gratification and so much media in front of us, it's easy to sort of drop into confusion. And if you're already in a dire situation, just like you explained for yourself, and your decisions weren't even that bad, it just sort of snowballs at times.
Yeah.
And then you're caught. And so you already have that sort of low mindset, you're in a depression or whatever it is. And then you add all these people coming at you, and it's hard to know where to go from there.
Yeah, it's funny. I was talking to somebody last night about how, the expression sticking your head in the sand. And I'm sure people can relate. But, for a long time, like I didn't check the mail, right? Like even as an adult, like I didn't want to check the mail. And they said, well, why wouldn't you want to check the mail? And I was like, because I could easily ignore mail, right? If you just haven't checked the mail, you just haven't checked the mail. It's fine. But there was it just hits a little different when you check the mail and then you see the bill and then you have to ignore the bill, right? That causes stress. It makes your stomach just turn, and you're now ignoring something that you needs to be addressed, but you don't have a way to do it. And so, if you've never been in those situations, sometimes it's hard to understand, but like literally the difference between a piece of mail, ignoring that and ignoring a bill, even if that bill's in the mail, it's just a lot different. And you're never going to win ignoring stuff. It's better as it makes it to put your head in the sand and park that stress for a day or two. The real answer is you got to start addressing it. You got to get some help, and there's folks that can do that. That's what most people don't really understand is there are programs, there are things that can help, try to help get you out of the cycle that you're in. And yeah, it takes a mental toll, it takes a physical toll.
Yeah. And I think there's also I know I think I'm from the same area or close to the same area you are. I'm from North Louisiana, and I know part of how I've sort of been conditioned when I was raised was, we took care of ourselves and you didn't talk about money. And so you end up in this spiral, and I've heard it referred to as a shame spiral, and there's no need for that shame. It's not shame. It's just something happened. Maybe it was a poor decision, but okay, we can get out of that. And I know for me that I feel like that's one of the biggest challenges that I face is trying to get that message to people that this is a judgment-free zone. Just, leave it all at the door and come in and ask the question. No one's going to judge you. No one's going to, we're all here to help and move forward from this situation that you're in. It's not about, creating that crazy shame spiral for people.
Yeah, I mean, somehow as a society, we've let, our net worth become a substitute for our self-worth. And like, that's just so far from the truth. I mean, some of the best people I know in the world are poor people. Like, I mean, it is what it is. They're good people. They're salt of the earth. They experience the world in a way and with an empathy that is hard to find outside of those circles. And so, I mean, you don't want to ever celebrate poverty because you know how much of a toll it can take. But I mean, I'll be honest, like I think we have to get over this tie between, well, a bad thing happened to you financially, or you made a bad decision financially. It happens. And that makes you lesser than, right? Because it doesn't inform at all who you are. There are terrible people that have gotten very wealthy, and there are, poor people who are just the greatest people in the world. And so that piece just has to go away. And you got to have kind of an honest dialogue about where you are and where you're trying to get to. And and even saying that, where you're trying to get to doesn't have to be millionaire status. I mean, that's like I've never been driven by money. I mean, I understand you have to have enough money, to live and to take care of your kids and family and that sort of thing. But I've never been motivated in terms of like that. How much can I get out of this? It's always been, do I have enough? Yes or no? If not, let's move on and let's focus on, what we can do, how we can give back, those sorts of things. And so, if we all kind of approach the world that way, I think those conversations become a little bit easier to have, because they're, it's easy to say, well, just come talk to us. But you're right. I mean, what you hit on is very profound. It's easy for us to say that, even knowing our motivations are pure, in trying to actually help them. But it's also very shameful from sometimes for those people to have those conversations. And so anything we can do to kind of remove the friction there, I think it's just better as a society. I mean, it's not an easy thing to do, but there are people that you can talk to about it.
I agree. What do you think are some of the biggest challenges that credit unions face right now?
Well, I mean, honestly, I have to start with the biggest ones, which is federal policy. I mean, credit unions have a nonprofit status. The banks don't really like that. And so they're going to continue to beat that drum at the federal level. I think, we have an obligation and a duty to say, look, this is probably the most efficient. If you say the lack of tax revenue is a cost, this is probably the most efficient government program money you'll ever spend ever. And so we have to continue beating that drum, let people know what credit unions do, how they help, the importance of not having that profit motive, right? And not having to meet these quarterly goals and raise capital and all of these sorts of things. That allows us to do all the other work that we celebrate. And understanding how many of these are in communities, right? Like we talk about banking deserts, financial deserts. And, those are never going to get filled by a big multinational bank. And it's pretty simple. I mean, they're not going to make a return opening a branch in some of these places. There's not enough money there for it to be interesting to them. Whereas, I've had conversations with credit union. We know we're going to lose money on this branch year after year after year. Our community needs a financial institution here. So we're going to commit. We're not moving it. We're not closing it. It doesn't matter. And so those types of things really matter. And we have to do a better job of telling that story, right? Like no one's going to tell our story for us. It has to be us. And so we've got to continue to do that at the federal level, just to kind of play some defense. The second thing, this may not be popular with the credit union world, but I think credit unions, the internal focus of the credit union people, like the community, it is very much looking in, right? That we don't spend a lot of time looking outward. And so a lot of the verbiage we use, I talk to my staff all the time about reducing friction, right? So every transaction or interaction, there's reasons people do or don't do things. And sometimes we try to attack the end goal when really all you have to do is remove a barrier and they'll make that decision themselves, right? And so removing the friction in that transaction. And we have not done a good job of that as a credit union industry. I mean, like if you just put on your, hey, I'm a college graduate, nobody ever talked to me about money. I've got to open a bank account, probably a checking account, and then you go try to join a credit union, right? Like go to Chase Bank and see what they need, right? And then go to randomcreditunion.com and see what they're saying. I'm a pretty educated guy, and I'm a member of credit union now, and I literally had to stop the registration process to figure out what some of the verbiage, right? The share draft versus the share draft plus the share, all these things. I was like, I just want a checking account, right? Like that's what I've heard all my life. And so I understand there's some nuance in the regulatory issues that require certain things to be in that language. But when you're talking to the general public, like that's to me the biggest threat. Like if you can't communicate with someone where they are, you can't help them. And so, being able to talk to them with language that they understand, we're the credit union industry, but what role do we play? We're a bank, right? Like we're a better bank. And sometimes I feel like in the credit union space, like people don't like using those terminology, but like there's no really other way to say it. Like nobody ever talks about, I've never, even 6 months doing this job, I've never once heard somebody saying, oh, well, I need to go, move money from my share draft account over to my share account. Like, no, I need to go get money from my savings and put it in my checking. Like even people who are longtime members of credit unions use that language. And yet, you won't do it on a website. You won't do it on marketing materials. Like, it baffles me. And it's kind of funny. I hope people don't get too mad about this. It is kind of funny to me, but it is a real threat, right? Like I'm saying this in a joking way, but like if you can't talk to people about what your product is, that's a real big problem if you need to grow.
I agree. And a lot of people don't understand that. And I know a lot of times when I talk or especially with classes or doing some of the marketing materials, that's some of the things I try to focus on, that I know we can't say the word bank, but financial institution just really doesn't hit people either. They don't fully understand what that is.
Yep.
And so it is a challenge to figure out how to say it where it makes sense and not sort of give up your identity, I guess. So yeah, I definitely understand.
I think some of that is just competition as well, right? Like I've never been afraid, like, okay, You got this industry that provides a service, and you got this industry. Like, I work for this industry. I will bank and bet on me being able to outperform them. Right? Maybe not through scale, maybe not, I may not have capital to do business lending to, every Joe Blow, and I may not be able to, bank high net worth individuals. But that's not who we're targeting, right? We don't have to even talk about those things. I think as a credit union industry, we can beat banks to the punch. I don't mind saying bank. I don't mind saying, any of these things, right? Like all we have to do is talk to them about what they know and about what they need, and then deliver. And if you actually have a better product, which I think you and I would agree we really do at the end of the day, then you're going to carry the day. But the problem is, if we can't communicate that value proposition to an everyday person, then it doesn't matter what product you have, because they're not going to see value in it.
It's so true. And once they figure it out, and once they know that you've helped them and made them happy, they're going to remember your name, and they're going to be able to say your name to other people. And that's what's important, when they can go and tell their story and their testimony, because that's what, then they go, you've got to go check this place out. They're going to help you too.
And look, I told a credit union CEO this. If you are, and a lot of credit unions are, kind of market minus 2%, somewhere around there on your interest rates for your loans, sometimes 1.5. That's a real difference, by the way, for a lot of families. You take a 5-year car loan, that's a big number. So let's say you're 1.5 better, advertised rate versus advertised rate, and you're not growing your loans. I mean, you got to take a real hard look at the way you are operating at that point, right? Like if your rate is that much better, and we like to hold ourselves to this high level of customer service and personal interaction, which I think we get right. Well, that only leaves one thing. Like, people either don't know about your product, or people don't understand how you're talking to them. That's really all it can mean. And so, again, I go back to, it's kind of a joke, like in this little world, and, people still, I'm still a bit of an outsider, I think. But like, I came in and I said, look, if you can't talk to people about your product, how do you talk to them? How are you supposed to get a new member if you can't talk their language? So it really is an issue that we're going to have to address. I don't have a silver bullet for it, but I think kind of as a credit union ecosystem, we really have to kind of figure out some answers for that, and how we talk to the general public.
Yeah, and it probably goes back to same things we were talking about with our members, is that